Welcome to the latest Motley Fool Scoreboard. I'm on in Chocolate Blue. We've got longtime fools, Jason Hall and Lou Whiteman, giving a 1 to 10 rating to the company we called Raytheon back in my day. It's RTX, ticker symbol RTX. We'll talk about the business first, including industries, factors like industry and competition. 10 is invincible, 1 is hopeless. Lou's at a 6.5, Jason's at a 7. We'll start with the decimal.
All right. So yeah, RTX, created by merging into defense assets with Raytheon, they were actually kind of bought out by the mostly commercial aerospace assets of United Technologies. And look, it's a powerful combination covering almost everything in the aerospace world, from missiles to radars to aircraft engines to cockpit interiors. There's a lot here that should be higher than a 6 to me. However, these are also capital-intensive businesses that, especially on the commercial side, are subject to cycles. And to be honest, Pratt Whitney, one of their big drivers of growth, hopefully, they've had some real issues there in recent years, helping to contribute to the recent bankruptcy of Spirit Airlines even. So, powerful set of assets with limitations and some questions about how it will all work together and work smoothly. I ended up nitpicking, and 6.5 is where I came out.
Yeah, that's a more precise answer, but it's probably the correct one. But directionally, I agree. It's, this is the consolidation of consolidators. So it's a trend that we've seen across the defense industry for a long time, and aerospace broadly. But I think it's the definition. You think about the long-term returns, how great they've been, but then look at the valuation of where we are now. Great customer base, how much money they're going to make on the defense side. It's the definition of like a high floor, lower ceiling business.
Yeah, even the consolidation of the name, they went from 11 total letters down to just 3. That's efficiency and synergy. For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Lou's going with a 5, Jason's going with a 6. Let's go optimistic.
I just can't help but wonder on it if the investment bankers that were trying to close that deal, that was one of the slides, showed that efficiency gain.
How much printer ink will you save, right? Yeah.
So let's move away from the investment bankers and talk about management, though. According to my insider contacts at the company, I don't really have any, but I do think there's some risk. We think about corporate culture, and I think maybe this is broad across a lot of companies in this industry. I think one of the risks that it faces is we're seeing kind of an aging out and retirement of a significant number of mid-level, like really the deeply tenured people that have that institutional knowledge. I think that might be a little bit of a threat. I mean, I remember reading something that they had to beg people out of retirement to ramp up a shuttered manufacturing facility to meet missile demand a couple of years ago when the war in Ukraine was ramping up. So this was a business that was caught on its heels. And I think we could see more risk of that going forward.
Yeah, so Chris Kalea, the CEO, he took over the job last December. He replaced a larger-than-life figure in Greg Hayes. Hayes was the architect of all these mergers. He was the consolidator. He was the empire builder. I think management has done a decent job addressing some of these Pratt and Whitney issues, especially compared to what's happened at, say, Boeing, which is the example of how things can just go from bad to worse. But look, Kalea came from Pratt and Whitney. That's where he was the head for years before taking that top job. You do have this question of, do you need a strong man, a larger-than-life character to make all of this work together? I think the jury is still out here on how this new management team will be able to run this monstrosity of a company. So we'll go right down the middle with a 5.
If you're wondering how much Lou loves the defense industry, my kids will be like, Michael Jordan, that was a legend. Even Patrick Mahomes, because, time shrinks, is a legend. I see in the notes from Lou, Hayes was a legend. That's how much he is a fanboy of this whole industry and how closely he follows it. Let's move on to the financials. A 10 is a fortress. A 1 is yikes. They're both going 7s. I just pumped up Lou, so you go ahead.
So Michael Jordan was a GOAT. I'm not sure I'd say that about Greg Hayes, but we'll leave it at that, right? But yeah, 7 here. Balance sheet is fine. Lots of debt, but it's manageable. That's sort of like the nature of the business. You have really strong free cash flow. Looking at the last quarter, we saw real blowout numbers on the defense side. Some of what Jason's talking about, some of these guys have been called back, and there is a lot of business to be done with replenishment with current events. 2.6 times future dollars booked for every dollar taken in a quarter. So that's really strong. You got a solid 2% dividend yield with upside as we move past the Pratt and Whitney issues. This isn't Apple, but there's nothing to worry about either. So I'm at a 7.
Yeah, there's not much else to say, but that's not going to stop me. The defense is going to continue to do well. The book of business is really strong. I do think maybe the sleeping, maybe concern people should remember is the Trump administration has a mandate to go in and really cut costs. It's less clear how much they're going to be able to do at defense, but Trump's position on Ukraine could maybe affect some of that future business opportunity. And I hate associating war and human suffering with a business opportunity, but that's kind of the reality that's been good for this company. But there's so much future revenue and profit that's already locked up for the company.
Jason, let's talk valuation. How well will RTX's stock do over the next 5 years? And how safe is it? A 10 is a sure thing, a 1 is a lottery ticket.
Yeah, safety score, I'm going to give it an 8. Again, so much predictability when these businesses, when your customer kind of tells you what they're going to spend for years and years ahead, and you get these contracts and you know exactly how much the contracts are worth for you in profit. So that, I think that limits downside risk. But the stock it's a little expensive. It's on the higher end of its multiples over the past decade or so. So I'm thinking 5 to 10% returns, average returns over the next decade. And investors that get that should be pretty happy with it.
So it's worth noting here that the stock is up 40% to date, which is really abnormal for this type of company. Most of that is catch up after the big Pratt Whitney debacle. We're now back to where we were, or a little ahead of where we were before that happened. I think this is a market beater on a total return basis, but only on a total return basis. So I'm only at 5 to 10% here, probably the top end of that. For safety, a 9. Yeah, this is a business that just won't dry up. A mix of commercial and defense assets makes it less vulnerable to cycles. Jason's point on Ukraine, I will say that even if nothing else happens from here, it's going to take years to replenish what we've already spent. So I feel good about that revenue. Worst case for me is it lags the markets. That's your downside there. That's not terrible downside.
Top it time. Jason, is there a company in RTX's space you like more?
Yeah, I'm going to go in a bit of a different direction and shift to more of the commercial side and more on the aviation side. And Embraer, I think, is really interesting. The tailwinds are really appealing. It's probably the best run jet maker on the planet. They don't really compete with Boeing and Airbus. They're more in the regional and smaller aircraft, but they have a small military business that they do as well. If they could just figure out a narrow body, long range airliner, this could get interesting.
Yeah, we don't want them to do that actually, but we should know
we really don't.
They use RTX engines, so it's good tie-in. It's perfect. I went with TransDigm here, which they are an aerospace component supplier. Longtime fools will know that I could just go on about this company forever. But look, 40% margins on making widgets. The stock is up almost 600% over the past decade. Just a spectacular best-of-class company. For buy and hold investors, if you want to buy one aerospace company, this is the first place you look. So TransDigm for me.
Thanks to both Lou and to Jason. They've given RTX an all right overall score of 6.6 out of 10. Well short of that 8.0 that would force me to own shares. It's safe, but it's not super great otherwise, at least scoring-wise. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up, not sure yet, but it'll be good. Till then, Fool on. RTX. Radix.